Do you want to know what's been going on in the Florida housing market and the Southwest Florida housing market? Well, in this video, we are bringing you an update on market stats, housing prices, housing inventory, mortgage rates, since there's a lot of stuff going on here, especially since the hurricane and COVID. Stay tuned. What's up, everybody? I'm Rob Wozner, a local realtor here in Southwest Florida. If this is your first time on my channel and you want to know everything about eating, sleeping, working, playing, and the real estate market, this is the channel you need to subscribe to. So make sure you hit the subscribe button and tap the bell so you're notified every time I drop a new video. And I have people from across the country and around the world reaching out to me every single day, and I absolutely love it. So if you're even thinking about making a move here to Southwest Florida, you need to take the first step. Give me a call, shoot me a text, send me an email, however you want to get in touch with me. I have the systems and processes dialed down to make this transaction as smooth and easy as possible. I have your back when buying or selling property in Southwest Florida. The Naples housing market is redefined. In the first year after a 2-year interruption in normal activity caused by the COVID-19 pandemic, the Naples real estate market is stable in terms of value, but there are not as many homes available to choose from, and prices have been elevated. What a difference a year can make. In December of 2021, the average 30-year fixed mortgage rate in the US was about 3.1%, based on data published by Freddie Mac. And that, by the way, was the highest monthly average rate we had seen since June of 2020. Fast forward just 12 months to December of 2022, and the US housing market was facing an average 30-year fixed mortgage rate of nearly 6.4%. The impact of that kind of change cannot be overstated. Let's consider a 30-year fixed rate loan on a $300,000 home with 20% down. At a rate of 3.1%, the monthly principal and interest payment on that mortgage would be $1,025. But at 6.4%, that's a $1,500 monthly payment, a nearly 50% increase. It should come as no surprise that when we had significantly fewer homes go under contract in December 2022 than a year ago, than in December of 2021. According to the latest statistics from Florida Realtors, new pending sales of single-family homes were down 31.5% year over year in December. One of the only silver linings here is that it was actually an improvement over the year-to-year declines of 41% and 37% reported for October and November, when rates were at higher average levels of about 6.9% and 6.8% respectively. There is an increasing consensus among economists that inflation has likely peaked, and as a result, mortgage rates have topped out as well. Should this prove to be true, there's still a big question looming over the housing market here in Florida and the rest of the US, which is how slowly and how much will mortgage rates recede from here. Unfortunately, there's no easy way to answer that. Interest rates are notoriously difficult to forecast, even in normal times when the Federal Reserve is not actively shifting its monetary policy to this degree. Back in December, several groups of housing market analysts and economists released predictions for where the average 30-year fixed mortgage rate will be in the fourth quarter of 2023. And what they basically came out with is they estimated a year-end rate of 5.2%. Meanwhile, both Redfin and the National Association of Realtors estimated a rate of 5.8%. Fannie Mae's forecast came in a little higher at 6%, and Realtor.com predicted very little change in the mortgage rate over the course of the year, resulting in a 7.1% average rate at the end of 2023. So as you can see, those numbers are fairly widespread, and we're not even considering that these are just the baseline forecasts for each of these forecasting outlets. The actual average mortgage rate has also already fallen by almost a 0.5 percentage point since most of these forecasts were published. So if they were to issue new estimates, it's likely that in most cases the revised estimates would be a bit lower on average. Nevertheless, there's a general consensus among the forecasters right now that the baseline case is for rates to move in a generally downward direction over the course of 2023. With the predictions of mortgage rates falling gradually throughout the year, that would likely result in the gradual return to monthly levels of home sales, similar to those we experienced in the last two pre-pandemic years of 2019 and 2018. We are not currently too far below those levels already. In December, new pending sales for single-family homes in Florida were about 14% lower than in 2019 and 5.4% lower than in 2018. In the meantime, though, we are going to continue to see some rough numbers on the sales side, particularly when it comes to year-over-year figures. Most sales that closed in December were subject to interest rates that were even higher than they are today, since most of them went under contract more than a month prior to closing. Closed sales of existing Florida single-family homes in December was down over 36%, while over in the townhouse condo category, closings were down 40%. I like to compare the Florida statistics to our local market here in Naples, Florida. New pending sales in Naples, Florida was down 34.3%. We had 138 pending sales in 2021 and just 682 in 2022. The total closed sales in Naples was also down, obviously, 42.3% in December. Back in 2021, we had 1,103 closed sales compared to 636 closed sales in 2022. Given that the housing market was still red hot at the beginning of the year, however, the difference between the annual totals for 2022 and 2021 were comparatively smaller, with annual closed sales falling by 18% in the single-family homes and 22% in the condo townhouse sales in these property categories. All right, let's change directions and talk about new listings. New listings in December continue to be constrained by high mortgage rates and a general sense of economic uncertainty among households. New listings of single-family homes were only down 3% overall in 2022, but recently have been falling off at a greater rate. In December, the single-family home listings, they were down 18% year over year. Over in the townhouse and condo category, the December decline was relatively smaller at 12.2%. But overall, for the year, listings were down 7.6%. These declines in new listings are a double-edged sword. So what do I mean by a double-edged sword? Well, they're limiting options for buyers, of course. But in doing so, they're also keeping the ratio of sellers to buyers from falling at a more rapid clip, which is keeping inventory growth modest and prices stable. The median price for closed single-family home sales in December was $395,000 statewide, and a 5.6% year-over-year increase over in the townhouse condo category. The median price was up 8.8% to $310,000 statewide. These are the statewide numbers, of course, but the 2023 market is going to vary from local area to local area. So to be sure to have a good handle on your local market statistics and trends as we move into 2023 by staying tuned to this YouTube channel, and I will keep you updated on everything happening here in Southwest Florida. When I look at inventory levels statewide, some of the markets in Florida now have inventory levels that are close to pre-pandemic levels, whereas other markets only saw modest increases in 2022. And in some markets, you'll see a stark difference in this trend from zip code to zip code. Back here in Southwest Florida, inventory levels are beginning to rebound, increasing 106.3% to 2,465 properties in December 2022 from 1,195 properties in December of 2021. Now, I'm uncertain where an influx of inventory will arrive to meet the pre-pandemic levels that we're used to. Something else that I like to keep track of, the report showed that only 105 homes for sale are below $300,000 in December compared to 1,816 in December of 2019. So aside from the below $300,000 price category, inventory nearly doubled in every other price category by the end of 2022 compared to 2021. Demand for the Naples lifestyle remained constant in 2022, and low inventory pressed median close prices upward. The overall median close price in December of 2022 increased once again 13.9% to $575,000, back from $505,000 in December of 2021. Looking back at December 2019, the median close price was $344,255, and inventory was double what it is today. I think we can expect values to stabilize despite our tight market. I believe the challenge moving forward will be convincing sellers and buyers that factors in place during the pandemic, when prices soared due to elevated demand, are completely different than they are today. It's going to take a while for us to readjust to the new market conditions. Economic factors affecting our market include a possible recession, rising mortgage rates, which are still above 6% on average, Many people who bought a home in the past 10 years enjoyed very low fixed rate. When you factor in rising rates, insurance assessments, and taxes, the cost of buying a home today in Naples is a lifestyle that many people can no longer afford. These same factors are affecting new listing inventory as well. Demand for homes in 2022 kept realtors busy looking for new listings, which dropped 8.4% to 13,577 compared to 14,819 in 2021. Many homeowners, especially those who purchase homes below $300,000 or at low interest rates, are now unable to afford a change in local addresses due to the increase of mortgage rates. We obviously cannot talk about 2022 without talking about the impacts of Hurricane Ian. The wake of Hurricane Ian in the Naples real estate market pivoted again in the fourth quarter of 2022. Homes that suffered damage fell into two categories depending on the age and the Federal Emergency Management Association, or FEMA's 50% rule. The FEMA 50% rule is part of the National Flood Insurance Program, mandates that if a home incurs substantial damage determined when repair costs or totals exceed 50% of the property's market value, it must be brought up to current building codes and floodplain regulations. So in the Naples area, older homes in affected areas like the Moorings, Park Shore, and Naples Park are facing that situation right now, which might produce some new inventory as the owners may not want to bear the cost of renovations. The number of single-family homes in inventory decreased by 54 homes between November and December of 2022, while condominium inventory rose by 44 condominiums during the same time frame. Condos were a big asset class to offload in December, especially after the hurricane, where assessments are rising and new mandatory reserve requirements were put back in place. So a lot of condos are coming back onto the market. New home builds were slowing down since many builders are busy with hurricane renovations. While new home builds slumped in December, according to the report, new construction sales consumed 16.7% of all closed sales in the Naples area in December, up slightly compared to the last 2 months. One thing you have to remember is that here in Southwest Florida, we are not a traditional market, and that we don't rely on people moving internally like other metropolitan areas in the US. Because our location's desirability, there will always be a demand for a property by people who want a piece of the Naples lifestyle. Thank you again for watching my market report update video, and please leave a comment at the bottom of the video and let us know what you think and what you predict is going to happen in the real estate market. And I look forward to seeing you on my next video.